Well, good morning, everybody. Welcome to Gulf Intelligence Daily Energy Markets live video podcast on Wednesday, the 7th of December, a day that, in the words of President Roosevelt, will live forever in infamy. He was talking about the attack on Pearl Harbor in 1941. But in this part of the world, the Middle East, it will live forever in glory as the day that Morocco knocked Spain out of the World Cup. And what a show it was in Qatar in the early hours of this morning. Well played, Morocco. I think despite the curmudgeonly Western media, Qatar has so far come up with a very good World Cup indeed. The football has been terrific, and there's still lots more to come. But I digress. Also on this day, perhaps more infamous, the price of a barrel of Brent crude fell below 80 barrels for the first time in nearly a year. And I've got three people with me this morning who I'm sure will be able to tell us why. Let me go first to Ollie Hansen, Head of Commodity Strategy at Saxo Bank over in Copenhagen, Denmark. Ollie, hello, welcome back.
Good morning.
Hi. I see that you're all wrapped up there in Copenhagen. Is it it's temperature dropping?
It's getting a bit wintry here indeed, yes. So,
right.
So starting a bit warm here from the morning.
Okay, well, stay warm. Now, Ole, it's been a few days since the OPEC Plus meeting that basically stuck to its guns with its cuts, despite some speculation that it might cut further, and the introduction of the G7 and EU oil price sanctions against Russia. So the instant reaction of oil is to fall below 80 barrels again. So tell us, what's happening?
Oh gosh, that's a very good question, Frank. There's no doubt that this market is in a bit of a flux right now, trying to work out what's really what should be the main driver for the markets. We're seeing open interest in the Brent crude oil future dropping to the lowest level since 2015. We're seeing liquidity down. We're seeing volatility up. That's clearly not the best way for a market to operate. But the weakness we're seeing right now is still basically the market looking into 23, and they're seeing dark clouds on the horizon regarding growth, recession risks, both in the US but also in Europe and elsewhere. We're seeing the front end of the curve tipping back into contango. So basically just a growth and a demand scare that's for now driving the markets. The excitement about the reopening of China has faded, even though we just saw we saw quite a robust increase in imports for last month from China. And but all in all, the market is concerned about concerned about demand. The momentum right now is in the hands, is basically favoring those trading this market from the short position. So we're going to see whether we can challenge OPEC Plus in their resolve to keep prices steady at most certainly higher levels than where we're seeing them right now.
Right. So it's concerns about demand rather than supply.
Yes.
Just driving the market now. Okay, let me go to Rafik Latta, Senior Correspondent for Energy Intelligence over there in Cyprus. And we want to talk more about supply, Rafik. We're seeing reports of a major blockage of crude oil tankers trying to get through the Bosphorus. Kazakh crude, according to some reports. What's happening there? Is this the first discernible effect of the sanctions on Russian exports?
Yeah, I mean, just to emphasize what Ollie was saying, like we're in a real Bermuda Triangle as far as like what's going on. I mean, we don't know how this price cap is going to be implemented, how it's going to be managed. We don't know about the Russian response yet. And what we're seeing at the Turkish Straits is the first example of some unintended consequences. So if you've not been reading, there's a big backlog of tankers up there. The Turkish Chamber of Commerce has sent a message to all ships passing through that you need to show that you've got insurance covering the Turkish Straits. And the thing to stress is we don't know how bad it is. This issue of like how many Kazakh tankers are there. It does look like, if you look at it, it's pretty predominantly to Kazakh tankers, but that's because the Russian ones have all turned off the AIS.
Right.
Yeah, so we at the moment it seems like they're weirdly just applying this to Kazakh tankers, but that probably isn't the case. It probably everyone's in the same boat. And B, there are some waiting times around this time of the year. I was there in Istanbul just the other week, and you can see a bit of a backlog building up. You always have a bit of a wait there. So it's a bit hard to judge exactly how bad it is. We'll know in the coming week or so, but hopefully, they will get this thing sorted out, and it'll just be a question of teething troubles. I suspect, because it's in their interest to make sure it happens, that this is not the case. We're going to see teething trouble after teething trouble after teething trouble, because it's in Russia's interest to make sure this thing does not work smoothly.
Right.
Yeah, and. Yeah, I mean,
as you said, Rafik, we are still awaiting the Russian response. We don't know how they're going to respond. Are they going to stop exporting to countries that obey the sanctions? Give us your take on what they might do.
I think they're going to play it by ear. If they're smart, they're going to play it by ear. They're going to try and do things that are unexpected. The one thing we do know is they've built up this quite a sizable fleet of vessels that can take that don't need Western cover, so there's a certain amount of leeway in there, and I suspect they're not going to stop exporting to India if India were to choose to apply the price cap. That's quite clear. They've got limited options, but where prices are at the moment and the world economic situation is at the moment, we are seeing more customers go to Russia. That's a point that's not been emphasized. Okay. And just yesterday, I think the Pakistani Minister of Energy was in Moscow trying to sort out a deal. So people, with the recession coming up, there will be more takers for Russian crude, so it's got that big card in its hand, but I suspect it will play hard and fast with supply on certain minor customers should they be publicly trying to impose this price cap. And again, we don't know if this price cap is exactly going to hurt it that much. Prices go down 60.
Prices are falling anyway. Yeah. There isn't much further to go.
Pretty big cap.
Absolutely. Ole, how do you read Russian motives and Russian intentions now?
Well, they just want to sell their oil, full stop. So they'll find ways to as far as they can to get around sanctions and price caps and so on to get their oil out. There's this growing number of ships belonging to a dark fleet, which has expanded quite a bit in recent months. So that does indicate that they will just attempt to get their oil out to buyers, and obviously their oil is dead cheap. So in this recessionary environment, anything that can be picked up at a bargain is obviously some that several countries would jump at. So so at this point in time, as Rafik also mentioned, the prices are as low as they are right now. It's not really having any meaningful impact. The cap.
Yeah, of course. Yeah. Tell me, is that fleet that they've assembled up to the job? Can it transport that oil?
I have no idea. I assume it's not the newest and the brightest and the best.
It's not state of the art, is it?
No, it's not. So obviously there is a risk. There's a risk of a potential disaster involved there, but that's not for me to dwell into. I'm not a shipping man. Okay.
Let me just go back to the OPEC Plus meeting that occurred last weekend. It was steady as she goes, wait and see, stuck to the previous level of cuts to 2 million in theory. There was some speculation that it might cut further. There was also earlier some speculation that it might increase, which shows you, I think, something about the state of the market, that it's jumping around all over the place. But one of the, I think, not very commented on parts of the OPEC statement was that they have changed the frequency of OPEC Plus meetings. They will no longer be every month. The next formal OPEC Plus meeting isn't scheduled until June next year. But the organization left itself the option to call a meeting at any time on the recommendation of the JMMC, the Joint Ministerial Monitoring Committee. if circumstances required. And what I would like to get a sense from you two is of what kind of circumstances would trigger that calling of an emergency OPEC Plus meeting.
Well, I think in the first place, first and foremost, a substantial additional drop in the oil price. That is one that I don't think they want to allow. So I think that would be the near term concern. Obviously, any potential discussions about raising production, we're nowhere near that at this point in time. So in the over the coming months, it will most certainly be the global the direction of the global economy, and with that also demand for crude oil that could potentially trigger such a meeting. Right.
Rafiq, what do you think? Is there any chance of an increase? You know, we talked about the possible constraints that will be on supply because of Russia. Is there any chance of an increase in the next 6 months, do you think?
Well, I mean, I hate to be very definitive in a market like this, but I will eat my laptop if there's not a meeting in the next 6 months. Okay. I just cannot see it happening. There will be something. I think OPEC Plus, and when I say about OPEC Plus, I mean the leadership of OPEC Plus, right to the top, were very much taken aback at the reaction to the 2 million barrel a day cut announced at the beginning of October. I think it was a big shock to the system. Let's not forget there was words like, you know, you're going to suffer, you're going to pay a price, etc., etc. A kind of rhetoric we'd not seen. I'm not sure I've ever seen it.
Yeah, no, absolutely unprecedented. Yeah,
the lesson got to them is, wait a minute, we've got to do this a bit more hands-off and a bit more remote control, a little less public is going to help us. So I think we're going to have to wait to see how things play out. But
sure.
It wouldn't surprise me if the very tight OPEC adherence to that we've seen from the big players gets a bit sloppy in the next 6 months as they kind of informally adjust to market needs. So we might not see as many meetings as you'd have thought from in the past, even if the market is continues being turbulent. Nevertheless, I'd still be surprised.
Thanks, Rafiq. I want to move to Victor Yang. Over there in Guangzhou in southern China. Victor is senior editor, JLC Technology Network. Victor, and in many ways, you are at the cockpit of it all now, because a lot of the demand destruction that we've talked about has come about because of the zero COVID policy in China. That has been the focus of huge, unprecedented demonstrations in the country. And I want to ask you in some detail about the situation there on the ground.
Yes.
First, your reading of where we are in the possible loosening of the zero COVID restrictions.
Yes. Yes, you are saying I'm now in Guangzhou, and on or before November 30, the majority of Guangzhou was under lockdown, most districts. And it was kind of similar all over the country. Many cities had lockdowns, partial lockdowns before November 30. And then late on that day, on November 30, Guangzhou lifted the lockdown almost throughout the city.
Completely. Yeah.
Yes, not completely, but only restricted the lockdown to buildings where cases have been found, and then to floors, and later on until today to the apartments where a case has been found. So this lockdown has been narrowed down to the apartments where patients have been found now. So for the majority of the citizens in Guangzhou, they can move freely. They do not need to have COVID nucleic acid test again. Say if you do not want to take the test, no one will force you to take the test. It's up to your option. So
Okay.
it's quite a dramatic change, you know.
And is that the situation, Victor, also in Shanghai and Beijing, do you think?
Some cities have followed, but Beijing has not been in the same step yet. But some other cities, I mean, have been opening up, like Guangzhou too, a few cities. So the government is now planning to open it up gradually, not all at the same time, because it still fears about destruction of the medical system when all the cities open up all at the same time.
Yeah.
So this is a gradual process. We expect it to move forward gradually in the coming weeks.
There were reports this morning of potential 1 million fatalities once the zero COVID policy is lifted.
Well,
which is quite scary.
You mean by foreign media?
I can't. Yes, it was certainly foreign media. I didn't read any Chinese press this morning. Look, I don't know. Look, tell me. There are two issues here, aren't there? I mean, one is the effect that this has on the authority of the president. I guess, has he been forced to do this? Which is maybe beyond the scope here. But secondly, when does economic growth and therefore oil demand react to the reopening? When does economic growth seriously resume?
Well, and official data on November imports came out today. We saw a close to 12% jump in its November imports, and both month-on-month and year-on-year too. And we expect demand to recover gradually next year, and including in the last month of December too, as the government is opening up. And
right.
Well, demand policy should be more about the global demand instead of about China's demand, because the worst time for China is now passing.
Okay. We're through the worst, you think?
Yes, we largely, and medical experts have been explaining these few days about Omicron, saying that it's now basically like flu, so to calm people down. So in Guangzhou, I do not see any panic. People just come out as usual as before the pandemic. Just take some precautions, say wearing masks when they were taking transport. And in some other cases too.
Right.
So this is kind of moving forward all over the country. And today and yesterday, a lot of province governors saying that they must resume normal in the industry. Say they are pushing forward with the resumption of normal work in the industry. And this is going to speed up very quickly.
Okay, well, we're through the worst in China. We certainly hope so. But let me stay with you, Victor, because any time now, President Xi will be touching down in Riyadh on a visit to Saudi Arabia. This is a big thing for Saudi Arabia and a big thing for the Middle East. There are 3 summits going on over the next 3 days. But tell me, what do you think China wants to get out of it, expects to get out of it? Will there be, further oil security supply deals, other kinds of energy deals? What do you think will come out of this?
Well, we expect deeper cooperation between China and Saudi Arabia and some other countries in the Middle East. And we have seen that recently, say not just these days, but over the past few years, including with Qatar, UAE, Saudi Arabia, and say not long ago, Saudi Arabia, some people from Saudi Arabia came to Zhuhai for some kind of weapons, They are trying to, buying this for their own security. So they're trying to move away from the dependence on some other countries.
Sorry, they're
And
buying
deepen-
Chinese weapons.
Yes, deepen
Okay,
its cooperation with China, and China needs to secure its energy from the Middle East too. So we
Okay.
can see, yes, including from Oman, from some other countries, is imports from these countries has actually been growing when its total imports edged down in 2022.
Okay.
And yes, not long ago, Sinopec signed a gas deal with Qatar, and quite a large one. So with this, we've been seeing this trend is continuing.
Okay, that's interesting. About I realized that Saudi Arabia had bought some Chinese missile systems in the past, but I wasn't sure how recent this was and whether that was part of a growing trend. Ole, let me come to you and ask you: is there more to it than energy supply deals, oil supply deals? Is this an acceleration of the tilt by Saudi Arabia towards Asia, towards China in particular, that everyone's been talking about, and away from the USA?
Well, it's a good question. I think obviously Middle East being stuck in the middle, being a major provider of energy, but also a major source of financial wealth right now, is a region that will attract a lot of attention from the outside, and not least from China as well. So whether it's part of a major geopolitical change, I think that remains to be seen. But China has the goods, and Saudi Arabia and Middle East got the money. So obviously that is probably the main reason why we see such an interest building right now.
Rafiq, you mentioned the extreme reaction in US and Western media to the last round of OPEC plus cuts. Events like this visit will just exacerbate that, won't they?
Well, it's hard to say, but one thing I would like to say is to highlight the role of Xi Jinping. I mean, he's been involved. He's basically the architect of this. Even before he became president, if you remember when oil prices spiked way back in 2008, they had that Jeddah meeting when they got to 137. He went to Saudi Arabia. Then he attended that meeting, and they signed a deal for Chinese imports to go over 1 million around that meeting. So there have been the past experience would point to some tangible deals coming out of this visit, and yes, it's not going to be kindly looked on by Washington. I think the key for Washington is the Huawei that kind of deal, right, whereby they're. I don't know how well founded they are, but the allegation is that your use of a Chinese AI ecosystem impacts.
Presents a security risk for.
So I think that's going to be a red line. It certainly has caused problems with the UAE relationship. But there's just so much to be done in Saudi Arabia. You look at NEOM, you look at all the economic diversification plans. The renewables is a big deal in Saudi Arabia, and let's not forget that China actually has a stake in Aqua Power, one of the biggest firms.
Yeah, of course. So
there's a lot to be done. There's a lot to be done. There's very legitimate reasons why both sides are going to have a profitable few days.
Okay, let me ask a bit more about the US, because one other explanation for the recent fall in crude prices is the prospect of another interest rate hike by the Federal Reserve when it meets next week, its last meeting of the year. Ole, do you think that is a driving factor in the weakness we've seen in oil prices?
No, I think it's more. I think the market is looking for that hike. They're probably looking at this point for the hike, the pace of or the strength of hikes to slow down, but potentially not the ultimate peak. And I think that's been the main change this past week. That the market is looking for a slower pace of hikes, but potentially not a lower peak when that peak eventually emerges. Because what we're seeing right now, and that's still a major dilemma for the global economy is that the U.S. Federal Reserve is hiking into strength because the economic data is still not lying down, whereas the rest of the world is hiking into weakness. And that's basically creating these discrepancies that's also having been supporting the dollar throughout most of the year. So it's really a question of starting to see some emerging weakness in economic data, which obviously will take the sting out of the rate hike projections, but at the same time, obviously, will also react as a dampening impact on the economic growth outlook, and with that also the stock markets, and with that also the general level of risk appetite, which is filtering through to commodities and crude oil, as we've seen this week, where stocks has reversed sharply lower, and that's also been the reason why we've seen this loss of risk appetite in the oil market.
Okay. Can we call up the survey question, please? If you could just give this a moment's thought and vote accordingly. So the next full meeting of OPEC Plus is not scheduled to take place until June 2023, but the organization has left itself the option to intervene in oil markets at any time before that. Because of the volatility in global markets, OPEC will intervene once more and then you have to choose between one of these. The next 2 months, within 4 months, or it will wait until June next year. So give us your feeling on that, please. Let me go to Ole again, because one of the kind of highlights in the run up to Christmas every year is the publication of Saxo Bank's outrageous predictions for the coming year. These have often been a source of great controversy, but also with a surprising amount of accuracy for some what seems on the surface to be some pretty wild guesses. This year you are talking about the war economy, Ole. Yeah. And again, there are some pretty outrageous ideas in there. Macron will resign. There will be a vote in the UK to reverse Brexit, for example. But the one that caught my eye from an energy point of view was the idea of a new Manhattan project. The US billionaires in the US coming together to launch a multi-trillion-dollar investment fund to invest in the energy transition and renewables. When I read this, I just wondered, is this really that outrageous? Tell us, doesn't the whole energy transition argument need something like this, need something like kickstarting, to really get it going, especially in current circumstances?
Well, it's a different way of just looking at some maybe potential redistribution of wealth, because obviously we all know that during the past decade we've seen an enormous concentration of wealth in a few hands around the world, and that's obviously a problem for governments because of the taxation levels. But it's also a problem with some of these major challenges that the world is facing over the coming years. So basically, we thought, well, who might be considered easing their wallets a bit and start looking at projects that would be good for the common prosperity. And then we looked at some of these major IT companies and some of these major billionaire owners of companies basically saying, well, this process is not happening fast enough. We need the energy transition. Otherwise, our computers aren't going to run. We're not going to get to where we want to go. So it's just part of that whole process that we came up with that. So yeah, it may be not that outrageous. So it would be great if it actually did materialize.
Yeah, maybe not. Yeah, Rafik, does it need Elon Musk and his friends to come together to kickstart the financing of the energy transition?
Don't know about that, but I do know that Saxo Bank's not alone. I was in COP27 in Sharm el-Sheikh, and Irina were talking about a Marshall Plan. You're hearing quite a lot about it, about some need for like a major kick. I mean, clearly, it's just not going to work with the energy transition. Is not going to work without the developing world, and the developing world, it's not going to happen unless there's a massive injection of finance, and especially into things like grid and supply chains.
Right.
So I think that those things are starting to come into focus more. And I don't think it's that wilder prediction.
Victor, China has lots of multi-billionaires. Do you think that they were gang together to help finance the energy transition along with Americans?
Well, China has been actually speeding up its transition to green energy over the past few years. And this will continue in the coming years too. It's not kind of competition with some other countries. It's just for its own growth. It needs to have this transition because it cannot rely on fossil fuel for long. Saying and the country, first of all, is for the carbon emission target, and second for sustainable development in the future. And so it has been continuing moving forward towards the transition. And we see that continuing in the coming years and even faster.
Okay, can we pull up the poll result, please? Interested to see this. Right, so everyone thinks that OPEC Plus are going to, or sorry, not everyone, most people think that OPEC Plus is going to jump back into markets pretty soon in the next 2 months. Thank you all for that. Thank you, Ole. Thank you, Rafik, and thank you particularly, Victor, there in China at the real heart of it at the moment. Thank you all for your views. It's been great. We will speak again, I'm sure.
Thank you.
Thank you very much.
Have a nice
All the best.
Goodbye.
Bye.
day.